Hey there, we've got Anthony Smith, our lead economist here, to give us a little update on the carrier side of the house. Anthony, what are we looking at?
So we're going to look at where some of the market opportunities are within the US. And so what better platform to use than Sonar? So up first, we have our volume outbound tender rejection index compared to our volume outbound tender volume index in this map here. And what we can see in this map is where the highlighted areas of increased volume and increased tender rejections are overlaid. So if we look at this, we can kind of see that the national average for dry van trailer tender rejections have declined to 24.86, but something that we were talking about yesterday, even though we have that decline, we still see that there is still overall robust demand and robust tightening in the capacity. So that movement down doesn't quite speak to how high and how elevated everything is. So even though we have some downward movement, still very much high.
Yeah, right. It seems wrong to be celebrating a 25% OTRI, but again, like we talked about yesterday on FreightWaves, now it is better than 30%, like it was at the end of March. You look at the reefer side of things, it was even worse. We're down to like 40% roughly on the outbound tender reject index for reefer. That was at 50% just a few weeks ago. So things have improved, but remain extremely tight.
Exactly. So in our next chart, we're going to look at some of these more specific markets. And so up here, we first have Dallas to El Paso, that lane, and we also have the overall dry van outbound tender rejection index for El Paso. And so what we can see, biggest thing for carriers is carriers with excess capacity in the Dallas market should really expect more loads to deliver in the El Paso market. So we're seeing tightening capacity in El Paso, and that's pushing rejection rates up to 42.98%, so essentially 43%. So spot rates for on-demand capacity are on the rise in El Paso, and you'll have plenty of freight to deliver throughout other regions of the country when you're in there.
Right. I mean, El Paso is a huge cross-border town, a lot of shipments coming from Mexico, especially it's big into automotive and many of the things that are produced along that rail line and along the lines through the Texas border. 42%, I mean, that's extremely high, 43% basically on the van side. You know, like we were just saying, it's always a little bit tighter on the reefer side than the van side usually, but that's an extremely high rejection rate.
Exactly, and so when we're talking about reefer, of course, we're nearing or we're almost in what produce season proper, and so that's going to be another area of the country, Texas, especially when we're looking at Laredo, that's going to have a lot more opportunity or a lot more capacity, tightening in capacity throughout that region. So looking into our next chart, we're going to dive into another area that carriers should be looking at, and that's going to be Elizabeth to Boston. And then on this side, we have the inbound tender lead time for Boston, Massachusetts. And so when we're looking at this, we're seeing that while most carriers have become less reluctant to head to Boston as of late, as indicated by the inbound tender index right here on the right side, we're also seeing that the rejection rate has been up to 21.8%, which is below the national tender rate. So again, very interesting to see such an elevated rate still below the national rate. And so we can see that Boston has become more of a backhaul market in the most recent weeks. So it might be prudent to look for other ways to balance those loads to make it more of a balanced market before accepting tenders into Boston.
Yeah, Boston is always a strange market up there. The Northeast in general is, right? You get a lot of carriers that move up to the Northeast and either want to stay there or want to get out immediately. This time of the year, I don't know if you've seen the Maine. This is a shout out to Dean Croak, formerly of FreightWaves fame. He taught me all about the Maine water bottle companies up there. They produce a significant amount of the country's water bottles. So this time of the year, you see Maine volumes pumping throughout the country, and they're usually carrying water bottles.
Always filled with fun facts, that man.
Yes, yes, he knows everything about freight.
Exactly, and so moving into our next one, we have another really cool market that I want to give us a look at is at Salt Lake City to Utah. We're talking about what's going on with capacity, and overall capacity is likely to tighten as outbound tender volumes rise 2% week over week, and despite a surge prior to the Memorial Day weekend. And so when we're looking at this, the big thing for carriers is looking at the Salt Lake City's market pricing power has been slowly shifting back to the hands of shippers and brokers. And so this is one of the things that you could probably talk to on a much more broader scale is the swaying between from your DHL supply chain pricing power index between carriers and shippers. And so this is one of the more micro or regional areas that we're kind of seeing that shift happen.
Right. We've definitely seen that DHL supply chain price power index. It has come down from a high of 80, 85 there the middle of last year. It's hovering around 70. It's been there for a while. We just haven't seen that much movement, right? We've seen outbound tender volumes steady at that 15,000 mark, kind of walking along the x-axis. Well, we've seen tender rejections still above 25%. Again, progress from the 30% we saw a few weeks ago, but still extremely difficult to secure capacity both on dry van, reefer, and flatbed side. That is evident in the contract rates being pushed up over the past few weeks and spot rates being extremely elevated.
That's exactly right. And so these are much more on the micro scale as we're kind of looking at specific market opportunities. But on a large scale, we're seeing those huge or those significant trends. And one of those other big significant trends when talking to Zach Strickland is, of course, that big one that we've been talking about, that pull forward. When we're looking at significant movements within these typical seasonal patterns within freight. So talking about, of course, regional retail sales or things like that. So that pull forward for that retail holiday, especially as we look towards the latter half of Q3 into Q4. So expecting some of those trends to be pulled forward, especially as I think Kaylee mentioned the LMI, one of those big things in the LMI, talking about prices, inventory levels have been very, very difficult to come by. And so those prices have been really translating throughout the entire supply chain.
Yeah, I don't think I'm alone in saying that I'm still kind of stuck in March 2020. Like every month goes by and I don't know whether it's been a week or a year. It seems like we were just talking about freight getting pushed out for the end of Q1. Here we are entering the final month of Q2, and that's right before a big holiday in July 4th. So we're definitely going to see a pull forward and some push out of freight here to finish the Q2. So we should have a strong month of June here for freight volumes.